This is our home buying series, and this is leveling up on your down payment. According to a recent survey, first-time homebuyers make up about 43% of the new home buyers market. It's an exciting time. You or someone you care about is considering the leap, transitioning from renter to owner. But financially, you may be wondering if you're ready. Hi, I'm Winnie Sun, longtime financial advisor, managing director of Sun Group Wealth Partners, and Forbes personal finance contributor and CNBC FA Council member. Today's video, we're going to focus on one of the most important money decisions you'll need to make when purchasing your first or even next home. Have you asked yourself, do I have enough money saved up for my down payment? And if not, what options do I have? I'm going to start by giving you some insight so that you can help answer that question. Then, the second part of this video series is designed to help those that you care about, those who also want to help you reach this big financial milestone, who are looking to help you meet that mortgage down payment and researching ways to better do that. So you definitely want to check out that video as well. What is a down payment? A down payment is the cash you need to pay upfront to make a large purchase, such as a home, and as a percentage of the purchase price. For example, a 10% down payment on a $450,000 home would be $45,000. When you're looking to buy a house and applying for a mortgage, your down payment is your contribution towards that purchase. This also represents your initial stake in the property. In the case of the mortgage, the bank would provide the rest of the funds necessary to buy the property. Now, in most cases, lenders will require a down payment for most mortgages. There are, of course, some exceptions, such as the federally backed VA loans and USDA loans, which you can consult your lender on. Typically, we suggest contributing at least a 20% down as your down payment for the new home, and of course, having even more money set aside for potential improvements, expenses, and other buffers. Another reason why having a 20% down payment is smart is that this further helps you avoid paying PMI or property mortgage insurance. Now, PMI insurance protects the mortgage lender just in case a borrower stops making payments on their loan. It's usually required when you have a conventional loan and you have a down payment of less than 20% of the home's purchase price. Or if you're refinancing with a conventional loan and your equity is less than 20% of the value of your home, that takes place as well. The minimum down payment required for a house varies depending on the type of mortgage. For example, FHA loans, which are loans backed by the Federal Housing Administration, require as little as a 3.5% down, but that could go higher. VHA loans, which are guaranteed by the U.S. Department of Veterans Affairs, usually don't require a down payment either. However, these loans are for current and veteran military service members and eligible surviving spouses. The USDA loans, which are loans backed by the U.S. Department of Agriculture's Rural Development Program, also don't have a down payment requirement. However, these loans are designed for rural and suburban homebuyers who meet the program's income limits and other requirements. Some conventional mortgages, such as the Fannie Mae Home Ready and Freddie Mac Home Possible mortgages, require as little as 3% down. It's important to note that conventional loans are not backed by the U.S. government, but that they do follow the down payment guidelines set by the U.S. government-sponsored enterprises such as Fannie Mae and Freddie Mac. So, as you can see, there are a lot of loans to consider. It's important to find a trusted mortgage loan professional to help you navigate the best options for you. Additionally, if you think you may qualify for a more specialized mortgage, do your research beforehand and then seek out a professional who has experience in that space. Another important thing to remember is that your down payment requirements will vary by lender and could be impacted by your credit score and your credit history. For example, the minimum down payment for an FHA loan is just 3.5% with a credit score of a 580 or higher. But if your credit score is lower, that down payment could increase to 10% and maybe even more. To start your own financial plan and save for those important goals in the future, please reach out to us. We would love to hear from you. And as a reminder, please share this video with someone that you care about and subscribe to be alerted of new videos. Thanks so much for watching and take care.